Good evening, gentlemen. My name is Arunachalam. I'm talking to you from Chennai, and I thank Isaka Muscat for giving me this wonderful opportunity of sharing some insights into a very interesting and very important topic, which is cyber insurance. Talking about cyber risk to cyber security and information security professionals is like taking coal to Newcastle. I have nothing to tell you about cyber risk itself, but I have a lot to share with you about how cyber insurance operates in the insurance space and how it comes as support and help for corporates across the world, and very connected to our topic, how do we bring in financial resilience through cyber insurance. Now, I have some insight as to cyber risk itself. This is, you should not mistake me, this is from the perspective of how clients look at it, the way I've had client conversations, and from the perspective of insurance practitioners. How do insurance practitioners look at cyber risk? We have seen from the insurance space how simple many years ago people speak about virus, and today we are talking about large scale events like WannaCry and NotPetya, which impacts hundreds of thousands of computers across the world, and really it brings large corporates to their knees when it comes to operations, and how cyber risk has expanded from just affecting local networks to possibly bringing in disruption across the globe. One corporate having global operations can really face the heat as to how cyber risk is impacting them, and how low impact attacks, which is just localized events, are now scaled up to impacting large corporates and shutting down operations. It is not just loss of data or loss of some amount of proprietary information. It is even coming in the way of corporates running their business. That's how close it is to business. And as they say, information is a new weapon. And at least in some columns, there is an expectation that the World War III could be fought on information, could be on cyberspace, and how these events are going to impact, forget individuals and forget governments, how it's going to impact corporates. And as you know, most businesses are moving towards digital. Worldwide, governments are encouraging people to use digital access to information. There's a digital solution to problems. A lot of governments are trying to expand on e-governance. So there is a shift towards moving into the digital space, which brings in a lot of opportunities for business growth, but alongside it brings a lot of exposure to cyber risk or digital risk. And we don't know where it's headed, where the next level of risk is going to be, and next layer of how risk is going to impact business. And as you know, whenever this risk is coming in, insurance is not ready at the doorstep to receive it. When business expands, then risk comes in first, and then an insurance solution comes next. There's always insurance to catch up, but the insurance will come in only after the risk is understood by everybody. Today, in my interactions with corporates across different sectors and domains, there is some kind of gap in understanding of risk. The way a corporate or a businessman or a decision maker is unable to fully understand the risk when it comes to his property, whether my stock of chemicals will catch fire, or whether there will be the next major flood water coming into my factory. He is unable to perceive the risk as we want them to. In a similar way, in our interactions with corporates, we see that there is a gap in their understanding cyber risk. So I am not a cyber risk practitioner, but I get an opportunity with the clients to talk about risk in general, and I never fail to bring in this topic of cyber risk, whatever be their business. So it is a great opportunity for an insurance person like me to open the eyes and open the ears of business people to consider that they must give due weightage to cyber risk. They can't be sleeping about it, and they can't be surprised or shocked when a data breach is happening, or when they lose money by a hack, their credentials are stolen and they lose money. They can't be surprised or shocked anymore, because cyber risk is on the headlines. Cyber risk is being talked about in the business corridors. And as you would have seen, the cyber risk is a boardroom priority today. If not for small companies, for mid-sized companies and large companies, cyber risk is a boardroom priority. It can't be given any less weightage than taking it to the board as to how better protected you are. So we have a common agenda. You as insurance information security professionals and me, or people like me who are risk management advisors, we have a common agenda to bring priority for this topic, which is cyber risk. And we have a different, our agenda differs is your business is to get the focus and attention from the management, from the corner room, from the CXO, that so much of priority is to be given to information security and cyber security. So much of investment has to be made, and with the due weightage and priority, the health of the organization is going to be secure. My agenda will be that please put in all these redundancies and mitigations and security procedures in place, and with all these facilities being there, still there could be a surprise. When the hacker gets better of us, there could be a surprise and there may be a loss. So the job of insurance is, it cannot prevent the loss from happening. We can't stop a fire from impacting a warehouse or a factory. We can't stop flood waters from coming in, but we can't stop a cyber attack happening. But what we can do as insurance practitioners is put in place an insurance policy which can help the organization absorb the impact, the financial impact of a cyber attack. When that event happens, there is a loss, which is upfront first party cost, or it can be a legal liability. This insurance policy should come to the rescue of a business owner, that when the attack happens, he has got a very good fallback mechanism. He has got an insurance mechanism. He's got a risk management mechanism which can help address the financial impact.
Mr. Arunachalam?
Yes, sir.
Sorry for interruption. I'm afraid I hope your screen is not hung or anything, because we are not able to see, any movement on your screen. I'm afraid whether the slide is stuck or not. So I hope everything is fine. Okay, yeah, it is now able. I could see the slides are moving now.
I just gone to the next slide, sir.
Okay, sir. Thank you. Since we couldn't see any movement on video screen also, I'm afraid okay, video is stuck.
No issues. I'm just going to the.
Thank you, sir. Sorry to interrupt. Please go ahead, sir. Sorry.
Yeah. So cyber is different for different organizations. Mr. Guru, I think you are coordinating, right?
Yes, sir. Very much, sir. You can raise up hand at any time. I can be available.
If you want me to go a little fast, you please let me know. Or if you want me to go a little slow, please let me know. Right?
Sir, this place is okay, sir. Fine, sir. Absolutely fine. Please go ahead.
Now, from our experience, cyber risk is different for different businesses. Are you able to see me on video, sir?
Video, I'm afraid it is stuck. It seems, because I could be able to see only a still, not a movement.
Let us focus on the screen, the slides only.
Yeah, more that. Okay, fine, sir. No problem, sir.
So, from our experience, we have seen that cyber risk is different for different businesses. Where if it is a pharma industry or auto OEM, the biggest worry for them is their research and development, their design data. For example, right today, just 2 hours back, I was sitting with a large auto OEM. They manufacture vehicles, and they also manufacture vehicles for a European principle. A European auto manufacturer is manufacturing vehicles in India through this organization. And for this Indian company, the biggest worry for them is, will somebody steal their design information? The prototype design information given to them by the European company is worth 50 million euros. So the contract signed by this Indian company with the European company has a clause that if at all this prototype design information is compromised, it is stolen or it is copied, and then that becomes public information, then the Indian company has to compensate the European company, not a small figure, 50 million euro. So that's their biggest worry. The second big worry is this company, in their manufacturing, in their assembly process, they have at least about 25 to 30 robots. You know, the robots will do cutting and welding and painting. Certain risky jobs is not done by human beings, it's done by robots. So their worry is, can the robots be hacked? And if the robots get hacked, the business production will be stopped. And if that business production is stopped, will we be losing our revenue? Is the second big worry. For banks, it is the loss of both data and money. All of us are aware of the GDPR regulations, and at least in the Indian market, people are worried about the Data Protection Act. There is a high priority being given to privacy world over by respective governments. For financial institutions like banks, it is both worry about private information of customers being stolen by hackers and then being sold on the dark net, or it is theft of money. Any number of incidents have happened, and they'll continue to happen, where financial institutions will lose money by a successful hack. So for them, loss of money and loss of data is a big time worry. So likewise, for every business, the priority is different, but what is common is their losing financially. Number one, in terms of will they be incurring cost when a breach happens? How much will be the cost for a forensic investigation? How much will be the cost for them to face a regulatory investigation, which is different? If a bank loses data of a million customers, there's going to be investigation by the regulator that how did you lose information about your customers? You are supposed to have a protocol, you are supposed to have a cyber security infrastructure in place. There was a structure given by the regulator. How did you deviate? How did you take less care than what you should have been? So if you face a regulatory investigation, that really costs very big money to handle the investigation, to appear before the investigator, to provide reports, and then to take consultants who can help go through the process is going to be very heavy on the financial institutions. So we feel that this different risk bothering different organizations will make this cyber risk space and the cyber insurance landscape to be quite amazing, that you need to have customized solution for every organization. And going forward, what is going to be quite heavy will be industrial control systems, distributed control systems, SCADA systems, which are being used by, let's say, renewable energy and other organizations, and manufacturing control systems where there is a automated manufacturing process. These organizations are going to face the heat from hackers who will take control of any of these industrial systems and then take the organization to ransom. They won't get, the hacker is not going to take anything from them. He is going to take them to ransom and then demand big time money. That's the next big worry. So the differentiated risk is what is going to be our focus for corporates. As you know, cyber risk is international in its nature. Sitting in Romania, sitting in Korea, or sitting in China, or sitting in Russia, the hacker is able to access organizations thousands of miles away and then take whatever they want. If they are successful, they reside in the system for months together, and they find their opportune time when they want to really hit and then take away data, take away money, or have a successful DDoS attack. Is going to be done by people sitting thousands of miles away. Frequently, they sit in places where they are beyond legal jurisdictions. They are beyond international conventions. I even read about hackers sitting in ships sailing in international waters, so that they are not within the jurisdiction of any country. So there is a higher degree of sophistication in the methods used by the hackers. So they are not going to be available for any court, any country, any judicial system for them to be taken on trial. That's going to be a major threat or major hazard element when you deal with hackers, and that's going to pose a challenge as to how will you recover. Now, what can be lost? Typical organization, what can they lose? Today, if you look at regulations, especially in Western jurisdictions like Europe or US, Mr. Guru, am I there?
Yes, sir. We could see your slide, sir.
Okay. I'm sorry, there was a webcam closure.
No problem, sir.
Okay. What is quite puzzling will be as to how this cyber attack is going to impact organizations. First, the biggest worry when you talk about international organizations is the loss of private information and loss of critical data. That's going to be a major worry. And secondly, there's going to be theft of business information, which is commercial information. And thirdly, a lot of contract information will be taken away. And data which is supposed to be under compliance. And finally, the intellectual property. That will be the biggest attraction for hackers, and that will be the biggest exposure. So currently, the bigger worry beyond loss of money or loss of other assets will be data assets. That's what is bothering corporates and organizations. And when legislations like GDPR or the Data Protection Act, as in India, come into force, you are facing a major fine or major penalty to be imposed. That's really staring at our corporates. And as we are seeing from the European example, it is going to be quite expensive to comply with the new regulations, to keep your organization ready when it comes to protecting data and all that it takes to secure the environment. It is going to be an expensive affair. I think many corporates have not realized the weight of this. Those jurisdictions where the laws are already in place and the cases have been filed, and as we hear in Ireland or somewhere else in Europe, the fines are already being levied on corporates who have not been very careful. Like British Airways is already in the public domain. It's going to become very, very important for organizations to worry about loss of data. And as I was telling, cyber risk to manufacturing is a big worry. Today, even the insurance industry is not quite prepared for this. If you take a large, let's say even the Gulf region, if you take a large refinery or a fertilizer complex or an oil pipeline, these kind of installations are largely controlled by digital control systems. The production and the reaction and the processes are controlled from a control room. And today it's a big worry for corporates. How do we secure, how do we insulate, and how do we keep these systems away from hackers? There's a lot of debate going on that these systems are never part of the internet. So there's no chance for somebody to break in or somebody to hack. And the counter argument is, if a committed hacker, a dedicated hacker wants to get access to these informations, they can anyway get it. For example, Stuxnet is an old story. The nuclear reactor in India where there has been a breach. Of course, the explanation given is it is only breach of information. There has not been a breach into the reactor itself. But the hacker is getting closer to getting control of the manufacturing process. I read that the CERT in US is reporting thousands and thousands of attempts to break into utility systems and then power grids and other systems. The latest we are seeing is city governments are impacted. Entire city governments are impacted, and the infected system, they have to shut down the city administration, and then they have to get control of it after a lot of time gap and a lot of expense to get the system back. So there's going to be a lot of activity in impacting manufacturing systems. All this while we were thinking it's going to be only data, it's going to be only private information. The next level of threat is manufacturing processes are going to face the heat. As of today, even insurance companies and reinsurers are wondering how to protect, how to give indemnity for this kind of a very big exposure. Now, the impact of a cyber risk financially will be, first, the organization that is impacted will face liability towards their principals. For example, a bank is losing information about their customers, not one, but tens of thousands of maybe million customers. It has happened in such scale. If the bank loses the information about customers, they are going to face class action suit. If the customers want to file a case, they're going to face class action suit. You might be already read enough about cases like Equifax or incidents like Target, where millions of customers, especially in jurisdictions like US, are impacted. There can be a real large legal suit that can land on these organizations. So liability is a big worry. Second is successful DDoS attack, and there can be an extortion for paying a ransom. And then third is sale of sensitive data in darknet, which can later come as a financial loss to the customers. If merely losing personal information like bank account information, driving license, addresses, and date of birth, and family information itself is going to pose a legal challenge to the organizations, the next level is if this data is sold by the hacker in darknet, and then there are people or groups who buy this information and then actually use it to, let's say, if it's a bank, to clone hundreds of thousands of credit cards or debit cards and then successfully enter the bank's account and take away money. That's the next level of threat a bank could face. So losing sensitive data is going to result in loss of money by the end customer. Then the organizations may lose by theft of login credentials into their financial systems, into their bank accounts. The login and password can be taken away by hackers, and then organizations may lose money. They are already losing like that. If any of this happens, the organization is going to make it necessary for them to investigate. Today, I've seen cases where the forensic investigation has cost at least about $500,000 to $1 million is the cost of investigating the incident, especially if it's a large bank, if it's a regulated entity, then they have to make sure they have a thorough investigation as to where the compromise happened, where the threat emanated, and then where the vulnerability is there, and what they should do to close those gaps is going to cost them really big for organizing these investigations. And they are also going to face fines or penalties by the governments that are there and the regulators. They are not going to be very kind to these organizations if they allow their systems to be breached. So what can really come as a big financial loss can be fines and penalties imposed by governments and imposed by the regulators. Then there is another issue is damage to their brand and reputation. If you're a bank, or if you're a call center, or if you're an organization where data can be so easily stolen, you're going to lose customers. If you're a bank, you will lose retail customers. If you're a call center or a BPO where you lose customer data from your system, you're not going to get the next big order from another bank because your systems are so weak. You will lose, and then your principal can face real heat. So damage to the brand, damage to reputation can be a serious issue if a successful hack happens. Loss of business or contracts, loss of customer confidence, and of course you may have to do internal investigation within your organization. Which part of the organization was not taking due care? Did you have a protocol in place to keep information safe, and has that been bypassed? Has that been not taken care of? Has that been overlooked by some employee or some department? You may have to do an internal investigation to fortify your position, to strengthen your position, to make sure that it doesn't get repeated. And you may finally face external probe. You may be a listed company, so stock exchange may want to probe. How did you lose information? How did you not comply with your regulator? So any of these outcomes are likely when a successful cyber attack would happen. I don't have to tell you much about GDPR. All of us are equally informed. This is really very, very worrying development in Europe. It came as a proposal or a framework in 2016 with a 2-year window given, and May 2018 it has come into force. And everybody facing Europe as a jurisdiction is expected to comply with the GDPR regulation, has to put in place those processes in place, has to have teams created for making sure there is compliance with GDPR, and of course do everything that is required to avoid that big time penalty that may come with a breach or a deviation or a non-compliance, where you will face a stiff penalty, which is 2% of your global revenue or 4%, depending on the case. So GDPR is a big worry, and at least in countries like India, they have simply followed what GDPR has done. There is a Data Protection Act. The bill has been introduced, and it is in the upper house of Parliament, and anytime if the upper house clears it, it may become an act. Sorry. and it's going to be a big worry for Indian corporates. Everybody will learn slowly, but it is the job of organizations like ISACA and members who are there and practitioners like me to spread the word that if you're not been taking care of these legislations, please take better care. Otherwise, it's going to come as a big shock to your organization and to your management. Now, the financial loss due to cyber attack will be number one, investigation cost, as I mentioned to you. If there is a legal case that is going to land on your organization, it's going to be involving a lawyer or a legal representative. There's going to be cost involved in engaging a good lawyer. And as I was mentioning, if there has been a real breach, then it is going to be coming as a civil fine or penalty. Then if the claimants are successful, the courts are going to pass legal awards. Depending on the maturity of the countries or the legal jurisdictions, the trial can be quite fast. In jurisdiction like US, the whole trial can be over within maybe 1 to 2 years, and the organization that you represent may face a stiff legal award, which you'll have to satisfy. It may run into millions of dollars. So that's a big worry if it is successful. Then the financial loss to the organization could be theft of money or securities. When I mentioned securities, it can be a stock broking company where somebody can hack and then sell away shares, and then the financial benefit can go to the account of the hacker. And what we are seeing very frequently is fraudulent emails coming to the organizations where it's a supplier seemingly sending an email, and then it is actually from a hacker with an attachment, and then organizations pay off those invoices thinking it is from a genuine supplier. And what they say is fake president fraud. The chairman or MD or the CEO or CFO sending a mail to one of his team members asking him, instructing him to remit some money, and the email has come from the hacker. We are seeing these instances regularly. It is happening with regularity, and if you think whether it is possible for organizations to lose millions of dollars by being defrauded, these incidents are happening frequently, and they get reported in the news. For example, there is an Italian company which has an Indian subsidiary. By a successful email compromise, the Indian subsidiary had paid out about 18 million US dollars to a hacker. It's a fascinating story. You can Google for this company called Technimont, TECHNIMONT, and Technimont Indian subsidiary paid out in Indian rupees 130 crores. I think it translates to about 18 million US dollars. They are paid out to the hacker by being duped by the hacker, who in this case, interestingly, sent a mail saying as though it is coming from the chairman of the company sitting in Italy, and the Indian CEO believed it. And then the hacker also came on a con call. So this was the first time in my experience I'm seeing the hacker, after sending a fraudulent email, also comes on a con call, and then he impersonated as though he is a real chairman, gave instructions on the con call to the Indian CEO to pay out money. He also brought in another hacker saying he is a legal advisor or a legal counsel, and then the two of them successfully convinced the Indian management to pay out $18 million, which is about 130 crores. So if we are wondering whether it is easy for somebody to dupe an organization, that to a European company, into paying off $18 million, it has happened. Gentlemen, if you can Google and figure out reports about Technimont, the Indian operation, you will see this. What I'm saying is reported in papers. And unfortunately, the regular insurance policies issued by insurers world over do not by default cover cyber risk, which is why today we'll be talking for the rest of this session about what is cyber insurance and how it can protect the organizations in a financial sense. And for the cyber risk to happen, the threats are both internal and external. It can be an employee clicking on an attachment or an employee clicking on a hyperlink and then ending up in a web page or a portal and then giving away passwords, giving away login information or giving away information, data, or uploading documents. Any of this is possible because of employee negligence or employee ignorance. In a recent case, I found out that a company paid out about 40,000 US dollars to a Chinese hacker who they thought is a genuine Chinese vendor. And I asked this company, don't you have protocols to tell your employee if there is an instruction of change of bank account coming from even a genuine supplier, you must have a verification by a call. You must call that organization wherever in the world, asking them, you are our genuine supplier and your supplier information is like this. Have you changed your bank account? We received an email saying you changed your bank account. Is that fact? It must be verified in a phone call. So I asked this customer that did you not have a protocol that if there is a change, if there is a request for change of bank account while remitting vendor payment, you must have a telephonic verification. This customer told yes, that protocol was there, but our employee didn't know it. He simply sent an email back to the Chinese vendor that this change of bank account, that email, is it genuine or not? But funnily this email has gone to the hacker, and the hacker sent a reply email saying it is a genuine advice, please transfer money, and they ended up transferring. So it is either a case of employees consciously avoiding or overriding instructions given, or employees being totally ignorant of what they should be doing, or the organization not giving enough training or enough alerts or warnings or precautionary advices to their team members across the enterprise. Could be a result, could be an outcome where a successful hack can happen. Or this could be outside threats where somebody is actively checking whether our systems are vulnerable, and one fine day they get access and then get into our system. Now, having spoken so much about our perspective or my perspective on cyber risk, I will tell you a little about what is cyber insurance and how it can bring in financial resilience to corporates, how it can provide financial support when the ultimate thing happens. Globally, the cyber insurance has two parts. One is the first party loss. First party loss is nothing but the cost that will be incurred by the organization when hack happens. When a successful hack happens, the first thing that an organization will lose will be the cost to manage the event, which means to engage cybersecurity professionals to investigate and identify where the compromise had happened, and also put in place quickly methodologies to secure your system and ensure the further loss of data or loss of money doesn't happen. That cost is going to be severe. That cost is borne by the cyber insurer. It is a part of a value addition that will come, but that's only a value addition. But the real value cyber insurance could bring is, I have shown you on screen one of the indicative covers. This is not universal. Worldwide cyber insurance policies don't look the same. I want you to note that the cyber insurance policies in India could be different from what they follow in Singapore, and that could be different from what they follow in Australia or New Zealand, and very different from what you see in Europe or US. The concept is same, but the approach and the methodology and the insurance contract could be very different. So today, for me to share with you, I am sharing you one template. What you see on screen is one template of what cyber insurance is available to customers. The first is e-theft. That is as a consequence of transferring money duped by fraudulent access to the system. For example, a hacker gets access to my credentials, and through this access to credentials, they are able to successfully take out money from my account or transfer money from my bank account. That is something that will come under e-theft. I'll give an example. You would have seen in many online reports about what they call Swift hack. Banks are facing worldwide, number of cases have come. The largest that I have seen is the Bangladesh bank, and there are other jurisdictions where this has been a case, where the hacker is able to get access to the SWIFT platform. SWIFT platform is used by banks worldwide, where one bank at the place of origin is able to transfer money to another bank thousands of miles away through a platform which is called SWIFT. The SWIFT platform is European in origin. It is run by a society, but thousands of banks world over are members of the SWIFT system. This is the only way banks are able to make fund transfer. This is the only way available for corporates in one country, in one small corner of a country, are able to send money to another part of the world by using their own banks. Now, in these SWIFT hacking incidents, the hacker is able to successfully get the login credentials of a bank official, maybe by phishing or maybe by any other methodology or by keylogger, whatever be the methodology they use, they get access to the login credentials. And then the hacker logs into the SWIFT platform as though he is the bank official. And then he is able to successfully transfer money from the bank, which is the victim of this hack, to a bank far off, to an account which is opened by the hacker. And then with a gap of maybe 1 day or 2 days, he is able to withdraw the money at the other end. So this is a classic case of electronic theft, where without your knowledge, the hacker comes in and takes out money. This is a loss that can be paid under cyber insurance in this template of policy that I have shown you. The second is e-communication loss. What is e-communication loss? I gave you example of this Chinese vendor sending an email to an Indian company by which they sent $40,000 is an e-communication loss. They got a communication saying there is a change of bank account, you pay money into this account, they are paid out. Third is e-threat loss. This is a typical loss which is happening when a DDoS attack happens. The hacker takes control of your system and is threatening you. Unless you make a ransom payment, I won't release your system. And the organization may end up paying ransom, as they say, in bitcoins to the hacker's account, and then they lose money heavily. Is a e-threat. E-vandalism is he doesn't take data from you. The hacker didn't take data. He didn't take money from you, but he has come in and then erased information. He has erased your commercial information. He has erased everything in your system. It is an act of vandalism. Vandalism is coming in and destroying. He has destroyed all data. You're going to incur millions of dollars to restore the data, and because of that operation, you're going to incur cost. That is e-vandalism. And the next one is very important, which is business interruption. E-business interruption is the hacker is able to take control of your business operations. It can be a logistics system, it can be a manufacturing system. As I explained to you, manufacturer losing his control on his own system to a hacker, and then the hacker is able to stop the manufacturing process. If you look at the example of ThyssenKrupp, ThyssenKrupp is a steel manufacturer in Germany, and one fine day the manufacturing process was lost to the hands of a hacker. The hacker took control, and ThyssenKrupp in their process wanted to shut down their furnace. They could not shut down because the control of the furnace was in the hands of a hacker. This happened maybe 2-3 years ago, maybe 2015 or 16. What happened in 2019 is this company called Arunachalam. Every event that I am mentioning to you, you can Google and figure out and find out more information. This case of Arunachalam, which is a aluminum smelter, they are an aluminum manufacturer in Norway. Their operations where there are ladles or like a vessel which picks up molten aluminum, those ladles controlled by computers in a control room were taken over by a hacker. And then they couldn't take back control. The company called Arunachalam had to go back a few decades and had to take manual control of these ladles, these big vessels in which they take aluminum molten metal. They had to shut down the computer operation and go back to manual operation. That's how severe it can be. So when this happens, the manufacturer or the commercial organization has to shut down their business operation. If they shut down business operation, there's going to be a loss, maybe millions of dollars of non-production. and that business operation being stopped will result in loss of profit. It can result in a lot of expenses to get back their system. This loss of profit and loss of expenses can be claimed under the business interruption. This section is also called network interruption or network disruption. So typically, these sections are the larger benefits under a cyber insurance policy under this classification called first party loss. That is the insured company. If you are representing a bank, if you are representing a pharma company, if you are representing an insurance company, if you are representing a commercial organization, this will be the financial loss to the organization. This will be the financial cost that they will incur when a hack happens. And then followed by this will be various expenses. For example, if you take a bank in Europe or any other developed jurisdiction, if the data representing the customer, that means the private information of customer has been stolen, the regulations require that the bank will notify every customer that the information has been compromised. They have a legal obligation to send a notification. Notification would mean sending an email, possibly sending a paper, that means a letter to the customer to inform them that their private information has been compromised. Not only that they have to inform, they have to commit that their credit monitoring will take place to ensure that the hacker doesn't take away money from their system. And thirdly, they have to inform the customer that the bank is taking every effort necessary to protect the interest of the customer. This is called notification. This is a mandatory requirement. If you take cyber hacking incidents like Target, where 40 million customers' credit card, debit card information was taken away, Target had already spent about $120 million only on this notification, because the cost of sending a notification to each customer could be anywhere between $3 to $5, which means 40 million is $200 million will be the cost only for notification. So it's going to be extraordinarily difficult for the organization to bear this cost. This notification expense can be claimed under the cyber insurance policy. It's very important for organizations which have data belonging to thousands and thousands of customers. Usually these organizations are banks and non-banking financial companies, insurance companies, hotels. All of you would have read about Marriott case, which is one of the largest breach incidents in the past, where 500 million unique records have been taken. These organizations will really pay out millions and millions, maybe hundreds of $millions just to manage this notification. It's a very severe exposure for commercial organization. Then the remaining cost, for example, hiring a security consultant. If you have a DDoS attack and a hacker is demanding ransom, do you think the negotiation can be done internally by any of our organization or people there? We are not policemen. We are not from Scotland Yard. We can't open up to the hacker and discuss with him how much money or Bitcoin he wants and negotiate with him. This is not something we do every day, which means we have to engage security consultants. Usually these are policemen who, after retirement or resignation, set up their own security firms. They will be the intermediaries for an organization which is affected by DDoS attack to open up communication with the hacker and negotiate with them. And these organizations will really cost big money. They will be charging the victim or the victim organization their fees for handling this negotiation operations or the ransom demand discussions or negotiations is going to be quite severe, big time spent in engaging these companies. Those expenses can be claimed under a cyber insurance policy. Now you may be imagining, if this is going to be so severe, for how much the policy should be taken. The question is, we don't know how deeply an organization is going to be impacted when a hack happens. It can be a small vulnerability. Somebody came in and then took some data. Nobody knew about it. Everything is silent and no expense. Nothing has happened. Or it can be a breach which came out in the public. You are a listed company. You have a disclosure to make to your stock exchange, and then it is reported in the papers, and then you are facing a very heavy expense to handle this. Or it can be a large incident where millions of customers' data have gone. You are facing an expense of, let's say, $100 million. it can't be ruled out. We don't know whether a policy has to be for $1 million or $10 million or $100 million. It depends on the size of your organization. It depends on where you operate. It depends on what is the jurisdiction under which you operate. It depends on whether you are a listed company or a non-listed company. It depends on whether you are an organization where you are data heavy. Data heavy would means you are a bank or a non-banking financial company. You are a hospital having private information, health information of your patients, or you are a hotel where in the past 5 years or 10 years you have collected a million records of your hotel guests, and that data is sitting in your system. Those organizations are data heavy. Data heavy organizations better take care and cover themselves properly for adequate amounts. Compared to this, you may be a small manufacturer. You're manufacturing, let's say, a rubber part for a car. You're manufacturing, let's say, a small aluminum part for a truck. You are not visible. Nobody knows you exist. You are too small for a hacker to take notice. You don't have to buy $100 million cyber insurance. You can go for a smaller amount. Still, you may need this cover, but you can go for a smaller amount. So it depends on these profile factors, these factors for you to decide for how much you will buy. So this is just the one part of cyber insurance, which is first party loss. The next one is liability. As I told you, if you are sitting on big data and a successful hack is happening and the hacker takes away information about your customers, not one or not one dozen, he takes out hundreds of thousands records, unique records of data, then what you're going to face is liability. So if somebody is not worried about facing the financial cost of dealing with a cyber attack, he has to be more worried. If he's worried about the cost, he has to be more worried about legal liability. Legal liability can become quite severe. I guess it is already reported that large incidents like Marriott breach, large incidents like Equifax, large incidents like Target, they are going to face hundreds of $millions value of civil suit, class action suit from their customers, end customers. Is going to be very severe on them. And I can tell you, as it is reported in public domain, most of these organizations have not purchased cyber insurance adequately. Like it's already in the public domain. Target had a cyber insurance policy of only $100 million, where the number of records, unique credit card records or debit card records stolen is 40 million, as it is reported. And merely the privacy notification itself has already cost them $130 million. And facing the investigations from multiple jurisdictions within the United States, Target has already spent more than $300 million. For how much have they purchased the cyber insurance is $100 million, which means beyond $100 million, that amount will be absorbed by the balance sheet of Target. Target could be a multi-billion-dollar company. They may have deep reserves. They may be a deep-pocketed large US corporate, but not every organization is like that. So it has to be part of the risk management assessment of an organization to look at their sector, to look at in which countries or which jurisdictions they operate, and make sure they are adequately protected. Even if they decide to buy cyber insurance, they are adequately protected because of this big monster called legal liability. Legal liability exposure also comes with a big ticket legal cost. Legal liability would be the payment of an award of a court passed against you. Legal cost will be the cost of engaging a good lawyer to defend you in a court. Mostly corporates do not represent themselves in a court because they don't have the skills to argue and present facts and present documents and go through the trial and examine witnesses, lead evidence, and make sure that our side would win. It calls for a lot of skill and a lot of tactics, a lot of strategy, a lot of experience. All of this is not available in-house, even in the largest of corporates in the world. It is at the hands of good lawyer, not one lawyer, but a clutch of good lawyers. And lawyers bill heavily. They are not cheap. They don't come cheap. Good lawyers come with a heavy bill. So this heavy bill of a lawyer, good lawyer, will be also met by a cyber insurance policy, which means defense cost. If a corporate buys a defense cyber insurance for, let's say, 10 million US dollars, the 10 million US dollars is available for paying off a legal award of a court passed against your organization. It is also available to pay the legal cost that can be charged by a lawyer to defend you. So this legal award and the defense cost are two major heads of outgo which a corporate would face, which are essentially part of the cyber insurance policy as it is issued world over. I have to remind you that the last slide I showed you about first party loss, and this slide that I've shown you, which is liability, is a template. What I'm showing you now is one template, is an example of one of the policy wordings. There are possibly a few hundred different policy wordings available worldwide. Depending on where your organization is operating, depending on which insurance company which is available locally to provide you this cover, or which international reinsurance company may be located in Singapore or Hong Kong or Dubai or London or Bermuda or the United States, wherever, which international reinsurer is willing to provide reinsurance support for covering your risk. Depending on this, the policy wording and the coverage terms and the definitions in the policy and the deductibles or excess or the insured's retention, all of this will be quite different. For you to understand typically what a cyber insurance policy would provide as coverage, I have shown you these two slides, and they can be taken as an example. If the members are interested and later such a request would come, I will be happy to share the full policy wordings. And if Isaka Muscat would send me a request, I'll be very happy to share the examples or more templates of this policy coverage. It will be very interesting for an academic understanding of what cyber insurance is all about. As I told you, forensic investigations are part of the value addition which comes with cyber insurance, and if a breach happens, the forensic investigation would follow. It is not at the choice of the insured organization. It's not the choice of your organization. Frequently, it is mandated by the regulator. If your company is a regulated, what is a regulated entity? I repeatedly told you about regulated entity is if the business of your organization is regulated. Who are all regulated? Banks are regulated. They have a banking regulator in every country. Insurance companies are regulated. There is an insurance commissioner or an insurance regulator in every country. Pharmaceutical pricing is regulated in most countries. Pharmaceutical drug discoveries are regulated in most countries. Stock trading by exchanges is regulated in most countries. So these are businesses which are regulated. If you are a regulated entity and you had data or you had information, private information, if that is compromised, in most likelihood your regulator will compel you means compel your organizations to do a forensic investigation to find out for yourself and to the satisfaction of the regulator which part of your business was most vulnerable and which part of your business was exposed, where was the compromise in your organization which resulted in this, so that that information is available to you as the victim organization. It is also available to the regulator so that he can come back and catch you that this part of the business was a compromise last time when a hit happened, when an attack happened, and we had advised you to strengthen that part, and then did you strengthen that is a question the regulator can ask this regulated entity. So forensic investigation would be a compulsory process for most regulated entities. Even non-regulated entities, it is a governance requirement. It is a corporate governance requirement where the stakeholders, which will be the shareholders or the board or the management, may want to know that as a governance requirement, which part of the business enterprise, which part of the organization was vulnerable, so that it allowed a hacker to come in and take away data or information or money. So it's a governance requirement. So forensic investigation is not cheap. It can run into several $100,000s of dollars, and depending on the scale of the incident, it can be a couple of $1 million or even more than that. Then the legal services, as I mentioned, is legal representation cost when your organization has to be represented in front of a regulator or a government, and you have to explain about what mitigations you put in place, what mitigations are already there that you want to present to the regulator or government, has to be represented by a lawyer. The legal representation cost is going to be quite significant. And the public relations or brand management, you don't want the front page of newspapers to scream talking about your organization facing this big time hack and the resultant impact on retail customers. Newspapers are less worried about what corporates are going through, what organizations are going through. They are many times more interested about what a common man goes through. The newspapers want to expose that. Newspapers want to report in their front page about what is the impact of a cyber attack or a hack to a common man. So if that happens, your organization has to engage public relations consultants, public PR firms to tackle the press and make sure that there is only limited exposure in the news report. It doesn't embarrass you so much that your reputation is severely damaged. It has to be organized. And who can organize this will be public relation consultants or public relation firms, and they don't come cheap. They charge extensively. For example, a famous food brand that had a major product liability exposure in India had to engage a PR firm to make sure, by spending several crores, to make sure there is not much of adverse publicity. There is, of course, publicity. There will be some discussions in the digital media, print media, and television media, but it doesn't get reported in such a way that the reputation of the organization is impacted. What these people also do is, when you come back to control, when you are better off, you have recovered your system, they will make sure that every positive story about it is reported in papers so that the public gets a good image about your organization. This doesn't happen automatically. This happens only by engaging very strong, experienced public relation firms, and the cost of paying those public relation firms normally are part of the cyber insurance policy coverage. There are exclusions in the cyber insurance policy, as I have shown in the screen. Many of these exclusions are exclusions you will find in every other policy. If you go back home and take the policy for your car, if you are in the office administering and you take the policy issued for your office building, you take policy issued for your household items. In many of these policies, you will find these similar exclusions. For example, war or war-like operation is an exclusion in most policies. Like that, cyber insurance policy would have exclusions. You will not find a single insurance policy anywhere in the world without exclusions. You can't do away with exclusions. So this policy also will have exclusions. Whether an incident happened in a way the policy pays for it, it falls within the coverage area, or whether an incident that happened, a cyber attack happened, whether it fell within excluded clause of the policy, it is not in the hands of you. It is not in the hands of an insured organization. It is in the hands of the hacker. Hacker decides how he wants to attack you. Whether it is within the covered area or whether it falls outside is something we would not know upfront. You would definitely not know when you buy the policy. You will know when the event has happened. And then you will have to carefully go through the process of investigating and finding out and establishing to the insurance company, yes, this has fallen within the scope of the policy, and then I want my claim. That's how much you should know about policy exclusions. Now, there is something in some jurisdiction they call a bundled cover. What is a bundled cover? Is the policy will also cover another aspect of these incidents, which is a crime. There is an insurance policy called commercial crime. So it has become regular for many organizations in many jurisdictions to not limit themselves to a cyber insurance policy, but also alongside by a commercial crime insurance. What I'm telling you now just falls outside the discussion about cyber insurance, but it may be beneficial, it may be interesting, it may be informative for you to know that organizations do buy another policy alongside, which is called crime insurance. Some aspects of the cyber incidents which may fall outside the cyber insurance policy, sometimes may fall within the crime insurance policy. So organizations have found it beneficial to buy both the covers, but what they do is buy both these policies with a common limit. There will be one limit of $10 million, one limit of $5 million, whatever limit they buy, that single limit is available both under a cyber policy and under a commercial crime policy. I'm just telling you, by the way, for you to know that this is something that corporates are doing, so that alongside learning something about cyber insurance, you also know that there is another policy which rides alongside cyber, which corporates have found to be quite useful. This crime insurance policy is nothing but a policy which pays for losses, financial losses the organizations will face when a fraud or a crime happens. This crime can be at the hands of an employee, this crime can happen at the hands of a third party outsider, or this crime can happen where both these parties are in collusion, an employee colluding with an outsider, or an outsider using an employee as a tool. Whichever way happens, if that event results in financial loss to the organization, this policy will pay. Examples I can give you are fund transfers, which are involuntary, where you are duped into paying out money by a fraudulent email. As I mentioned to you about business email compromise, where hacker sends a mail as though he is a genuine vendor, and incidents like the chairman or MD sending a mail to the CFO or the finance manager to instructing him to pay out money. Many of these incidents are frequently falling within the scope of a crime insurance policy instead of a cyber policy. As I told you, cyber insurance policy forms worldwide are very different. There are hundreds of different cyber insurance policy forms. In many cases, cyber insurance policies only cover liability. They do not cover the first party financial loss. So it has been quite common in those countries for customers to buy both cyber insurance and crime insurance. So my mention to you about crime insurance is only by the way. Please don't confuse yourself as this is part of cyber. It is not. It is something alongside cyber insurance. What you see on screen are cases where corporates or organizations really lost money to hackers, and they either paid out innocently or the hackers hacked into their system and got the credentials and then took out the funds involuntarily without the knowledge of customers. These organizations have really faced very big financial loss, and if they have had cyber and crime insurance alongside, they will be able to cover either of these policies. Now, how do I buy this cyber insurance, and what are the factors? If my organization is from a banking system or if my organization is a pharmaceutical company, how does it differ? The insurance companies, who are also called underwriters, they look at for these factors. What you see on screen are the factors they would see to decide, number one, whether to accept your cyber risk. Is your cyber risk good enough for them to accept, or it is beyond their appetite or beyond their capacity? Number two, what kind of premium rate to be charged to you? Should they charge 0.5%, that is 0.5% as a rate, or should they charge you 1% of your limit? If you buy a policy for $1 million, is the premium 1% of $1 million, or is it going to be 0.20%, which is 1/5 of 1%? What is the rate to be charged? Number three, what kind of terms and conditions to provide under the policy? This is all decided by these factors. What is number one factor? Which is your industry? Are you from the BFSI, that is banking, financial services and insurance? Are you from any of these sectors? Are you from pharma sector? Are you from healthcare sector? Are you from the manufacturing sector? That decides in a way your premium. Then next one is, what is the security or privacy culture of your organization? That's where you gentlemen would play a big role. That being information security practitioners, what kind of protocol, what kind of systems are there? If you have a cyber security team in place, what kind of cyber security preparedness have been brought in by these in these organizations? What kind of controls are there, which are organizational controls or which are administrative controls, which are electronic controls or physical controls. This will help an insurance company to decide, are you a good risk for them? And also your vendor management. Have you given server access to a vendor? Is it occasional? Is it one time? Or is it on a constant regular basis? Have you taken access of your principal? Are you a vendor and you have taken access, server access of your principal? Then finally comes, what is the loss experience? As a corporate in business, you may be a bank with a 30-year history. You may be a startup company with a 6-month or a 1-year history. What has been your experience in facing cyber attacks? Has a hacker been successful coming into your system, and have they taken out? Or you have never faced an attack, or you have never faced loss of data or money or any other asset? What is your past track record will decide whether a insurance company will give you a cyber insurance cover. For how much limit they will cover. You may want $50 million. They may say, we are not happy with your cyber security infrastructure, or we are not happy with your business continuity plan, or we are very uncomfortable with your DR plan. We will give you only a $5 million cover. Can be a stand taken by an insurer. So these parameters are followed by insurance companies to decide whether to give you cover and how much premium is to be charged and what are the terms and conditions which will come in your policy. As I told you before, your other insurance policies which corporates would buy would not cover cyber insurance. Your directors and officers liability insurance, if you are a professional, your professional indemnity insurance, your employee related insurance policies, your crime insurance policy per se would not cover cyber, and any other policy including your property insurance would not cover cyber insurance per se. Sometimes, rarely, because we can't talk about the entire world, some pocket, some corner of the world, there may be an insurance company who may say, my property insurance also covers cyber. But if they give a property insurance cover for $100 million, they will give a sublimit of 5%. That means $5 million as a cyber cover. That too as a small extension. That $5 million cover under a property insurance policy will not be equal to a standalone cyber insurance policy. A standalone cyber insurance policy will be having elaborate documentation. It will have a lot of definitions. It will lay out the entire coverage in a very clear manner. So a cyber insurance policy which is standing on its own will not be the same as an add-on cover to a property insurance policy. So your other policies would not be covering the wider cyber risk. So you need a cyber insurance policy to protect the wide exposure that your organization may have facing the cyber risk. Now, the process in a cyber claim when an attack happens is an attacker, as it happened in the Target case. A hacker comes into a system many months ago. In the case of Target, the hacker had come in 8 months before. Only on one fine day you discover. So cyber insurance policy responds when the attack or the impact of an attack is discovered by your organization, that you realize there has been a compromise, you realize data has been stolen or it has been copied, you realize money has been taken out. That is what is called a discovery. So on the day it is discovered, the organization will intimate to the insurance company, and the insurance company will appoint a forensic investigator on their own, or they will advise the corporate to appoint an investigator. As I told you, if you are a regulated entity or your entity facing the public, like a bank or an insurance company, you also have to inform the law enforcement. As you know very well, the law enforcement authorities, which in other words called the police authorities, world over have formed cyber crime investigation cells. So these organizations will investigate along with the insured organization about the incidents, and they will come up with their own report. And the insurance company will appoint a surveyor, and the surveyor will assess the loss. What is the financial amount to be paid to the organization? If a claim is to be paid, how much it is to be paid, and what kind of documentations are to be provided. Is it only the forensic investigation report, or is it copies of the system logs, or copies of any other documentation, or copies of any other investigation reports, or documentation to prove that you had a business expense or a cost, or invoices to be given by the outside agencies? All of this will be documentation, and finally the claim is discussed with the insurance company and with the surveyor, and it is finalized. This is the typical process followed in a successful cyber insurance claim. And as insurance advisors or brokers, we have built capability to advise our customers in advising their teams. Number one, about the cyber risk itself, and after advising them on the risk, not that we have to advise them, we are helping these organizations to appreciate what exactly they should be looking at when it comes to risk, especially cyber risk, and what part of the cyber risk can be transferred to an insurance policy, and helping them to design an insurance policy, and finally negotiate with the insurance company for getting a quotation, and based on the quotation and negotiation, placement of the insurance policy with the insurance companies. And when a hack happens, when an incident happens, to work along with the insured organization to submit the notification, submit the documentation, and helping the insurance company to process the claim, and finally to have the claim settled, is the role an insurance broker anywhere in the world will play to take the process from the policy placement to the claim settlement. So cyber insurance is evolving. In my experience, I would consider, especially from the Indian context, I think that could be the trend in many such geographies, that possibly 7 out of 10 organizations are still come to grips with the cyber risk, and they are not considered cyber insurance. But remaining organizations have gone into buying cyber insurance, and they've been renewing the cyber insurance, and they've been also perfecting the manner in which they will be buying cyber insurance, that whatever coverage they didn't take last time, they were able to include this time. They bought the policy for a lower limit last time, they were able to increase it this time. They were paying a higher premium rate last time, they had a clean record, 1 year went by without a hacking incident. That means they are a good, secure organization, or they were merely lucky. And because of this not having a claim, they can negotiate a better premium rate to be paid to the insurance company. So organizations are already going through this. I think it is the priority for organizations like ISACA to keep this cyber risk as an agenda point to be discussed with our teams internally, to be presented to our managements in the most forceful manner, in the most convincing manner. And it is the priority for individuals like me and organizations like mine to ensure that the good news is delivered to the corporate, that if you had a cyber risk and if you have a financial loss, you're not going to suffer it alone. You're going to have a protection from a cyber insurance policy, and good insurance advisors would be able to advise you as to how to customize the cyber insurance, and how to design the coverage, and also how to procure this insurance from your local market. It will be the job of a good insurance advisor or an insurance broker to do this. And I'm sure that once the eyes and ears are open about the risk, and a good level of clarity is achieved to understand cyber insurance, any organization will proceed and then go ahead to buy this insurance. And it will be my pleasure to support ISACA Muscat in trying to understand cyber insurance more, possibly by sharing more information, and maybe refresher sessions in the future to talk about more areas of cyber insurance, possibly to discuss about case studies, possibly to discuss about actual event that took place, which we handle, which will give a very good understanding for risk practitioners. You are also a risk practitioner, you handle information risk, and we are risk practitioners, we advise the insurability of this risk, and it will be our combined goal to make sure the organization that we represent are able to adequately protect themselves by cyber insurance. Mr. Guru, are you there?
Yeah, very much.
So I have finished my presentation. If you wish to proceed to the next stage, I'll be happy to let you do that.
Sure, sir. So is this the last slide, sir? Okay.
Yeah.
Thank you, sir. We are missing your video actually.
Oh, I'm so sorry. Okay, I think the presentation would have been useful.
Done. Anyhow, now I would like to open a question and answer session to the participants. So it would be great that if you are also visible on the screen.
Yeah.
Thank you so much, sir, for your wonderful presentation on cyber resilience, and you have given us lots of insight about the cyber risk and mainly on the aspect of insurance and how we have to proceed on the insurance perspective. This really gives a great insight to all the chapter members of Muscat because this is really totally a unique topic that we have all come across in this whole year. Though we have come across lots of cyber related stuff. This year we actually had a theme of cyber security for the whole year. The first session of the year we started with the cyber threats of the and the trends of cyber threat, and we are almost ending up this year's session with this webinar with cyber insurance and resilience through cyber insurance. So it has absolute connectivity, and I hope our participants and members also enjoyed the session. I open the session for the members for any questions, and if anybody have any questions, they may raise a hand so that we can give access to.
Questions can be sent by email.
Oh, okay, fine. Because due to not having time, I think it would be better that we can share the questions to the speaker later. So, with your permission, I think I can proceed with the quiz session, sir.
Yeah.
Okay, so I have a screen in front of me. I hope all of you can see my screen.
Yeah, we are seeing.
So the code for quiz is given here. Once members are ready, they can join the quiz by entering this code 806266. So as per the rule of the quiz, faster the answer, more the score you can gain. And we have given 15 seconds only for each and every question to be answered. And all the questions of today are of a very simple multiple choice nature of yes or no only. So participants can be aware of the answering pattern and start giving the answers quickly. So I think we can start, or how many are there to join? There are 30 plus participants who are there today, but we got only 18 now. Instead, I hope some more are joining. Okay, by this I can start the quiz. 19 people have joined already. To maintain the time limit, I am starting now. The very first question appears on your screen now. Standard cyber insurance covers damage to property due to a cyber attack. So 18 participants responded and 10 correct answers, which is the answer is no. If there is a network interruption, cyber insurance can cover the incident and pay for less of revenue.
Loss of revenue.
Yeah, there are 12 right answers. Answer is yes for this question. If there is a legal liability arising out of a cyber attack resulting in loss or destruction of data of a third party, if there is a legal liability, eight incorrect answers. What is a risk covered in cyber insurance? Yes or no? Answer is no. 17 correct answers. Cyber insurance in its full extent can be covered under other liability policies. So 11 correct answer, which is no. Can ransom demand be covered in cyber insurance? Sixteen right answer. Will the cyber insurance policy pay for defense cost of engaging lawyers? Does the policy list out the nature of incidents covered by cyber insurance? Yes. Do we need to buy cyber insurance company for subsidiaries? I hope this would be the last question. Yes, we could see the winners on the screen. The fastest is Mr. Biggs Dark Lighter. I don't know whose name it is. I think it is. I hope it is not a nickname or pet name. Anyway, congratulations, Mr. Biggs Dark Lighter. So thank you all for the participation, and we have one more question, which is a feedback of the session. I request all the participants to give this answer for the last question, the final question of the day. Thank you so much, and it looks very encouraging, sir. The response for the session and the seminar was inspiring.
Thank you very much, Isaka Muscat. Thank you, Mr. Mari and Guru, for giving this opportunity. I hope to be connected with Isaka Muscat in future also.
Sir,
Thank
thank
you.
you so much
Will do.
for your time, and thanks for accepting our invitation and presented this session. And I forgot to mention just one more thing. This session connected very well with our last session also, because the last session it was on the ransomware, whether we can to pay or not to pay. And subsequently, you are also attached with the insurance, cyber insurance. So I hope our participants and members are also enjoyed this session very much. So thank you once again for you, and thanks for Mr. Mari, the president of chapter, to give this wonderful opportunity and facilitated with this wonderful tool of webinar for Muscat chapter. So this is a successful third webinar that we have launched, though at the far end of the year, but it is a success, great success for the members. So I hope we will be having a more participation from the members in the coming thing also. Thank you so much, sir, and over to you, sir, if you have any words to.
Thank you very much. I wish all the members of Isaka Muscat all the best in their business and their profession, and Merry Christmas and a Happy New Year. I'll be very happy to be connected with you. Thank you so much.
Thank you, Mr.
Thank you, sir.
Arunachalam. Thank you all members, and have a good night. Thank you.
Thank you
Bye-bye.
all. Good night. Bye.
Thank you, Guru. Thank you, Mr. Arunachalam. Bye-bye.
Thank you,
I will
sir.
be in touch.
Yep, we'll
Thank
be
you.
in touch.
Thank you so much, sir.
Bye, Guru.